Hello friends, welcome to Ria's classes. So in the previous chapter we learned about the basic principles of accounting, especially double entry system. So according to this system, every financial transaction it has two aspects, a debit and a credit aspect. For example, if a business purchases furniture for cash, then two things are going to happen. First of all, the furniture is going to increase in the business, and secondly, cash is going to decrease. So we record furniture account debit to cash account credit. So this shows that every debit has a corresponding credit. Now imagine a business that performs hundreds of transactions every day. So each of these transactions must be recorded properly in the books of accounts. So the process usually follows these steps. First of all, the transactions are recorded in journal or subsidiary books. Then they are posted to ledger accounts. Then after that, the balances of ledger accounts they are calculated. But here is an important question. How do we know that all the postings made in the ledger are correct and balanced? So this is where an important accounting statement called trial balance comes into the picture. So trial balance basically it helps us to check whether the debit as well as the credit balances recorded in the ledger they are equal or not. So if the total matches, then it gives us confidence that the accounting records are arithmetically accurate. However, students, you must all remember one important thing. Even if the trial balance matches, it does not guarantee that there is no mistake in the books of accounts. Some errors can still exist. Therefore, in this chapter, we'll study about the meaning of trial balance, the objectives of preparing the trial balance, preparation of trial balance. We are going to explain the various types of errors, the methods of locating those errors, and rectification of errors. So understanding these concepts is basically extremely important because trial balance trial balance it acts as a bridge between ledger accounts and financial statements. So without preparing the trial balance it becomes very difficult to prepare the profit and loss account as well as balance sheet. Now first of all, let us look at the meaning of trial balance. Okay, so trial balance is basically it's a statement showing the balances of all ledger accounts arranged in two columns called as debit column and credit column. So the main purpose of preparing this statement is to verify the arithmetical accuracy of ledger accounts. Now let us understand this in simple terms. So after recording transactions in the journal and posting them into the ledger, each ledger account will show a balance. For example, cash account may have a debit balance, capital account it may have a credit balance, sales account it may have credit balance, purchase account it may have debit balance. So instead of checking each ledger account separately, we will collect the balances of all accounts and prepare a statement. This statement is called as trial balance. So trial balance basically helps us to check whether the total of debit balances is equal to the total of credit balances. So if both the totals are equal, it means that the debit as well as credit postings have been done correctly according to the double entry system. So students, you must also remember one important point. A trial balance only checks the arithmetical accuracy. It does not check the complete complete correctness of accounts. So this means that some errors, it may still remain even if the trial balance agrees. Now let us understand the importance of trial balance. Trial balance is an important statement because it performs several important functions in accounting. First of all, it helps in checking the correctness of ledger postings. Secondly, it helps in detecting errors in accounting records. Thirdly, it helps in preparing financial statements like trading account, profit and loss account, as well as we have balance sheet. So because the balances of accounts are already available in the trial balance, the accounts can easily be transferred to the final account. So thus the trial balance basically, it simplifies the preparation of financial statement. Now let us see the format of trial balance. So trial balance normally contains the following columns. First of all, we have the account title. So this column shows the name of the ledger accounts. For example, it can be cash account, it can be capital, it can be purchases, it can be sales, machinery, debtors, creditors, etc. Second column, we have the ledger folio. So this column basically contains the reference number of the ledger page where the account is recorded. Third, we have the debit balance. So if the account has a debit balance, then the amount will be written here. Fourth column, we have the credit balance. If the account has a credit balance, then the amount will be written in this column. So then at the end of the trial balance, the total of debit column and the total of credit column, they are calculated. If both the totals are equal, then the trial balance is set to tally or agree. Now let us see when is the trial balance prepared. So trial balance is generally prepared at the end of an accounting year. However, in modern accounting systems, trial balance may be prepared at different intervals like monthly, quarterly, half yearly, or annually, we know. So preparing trial balance regularly helps business identify errors quickly. Now let us see the steps in preparing trial balance. First of all, we have to calculate all the ledger balances. So after all the transactions that are posted in the ledger, the balance of each account must be calculated. Secondly, we have to list all the ledger accounts. So next we have to write the names of all the accounts in the trial balance. Third, we have to record all the balances. So if the account has a debit balance, write the amount in the debit column. If the account has a credit balance, then write the amount in the credit column. Fourth step is to total the columns. You have to add all the amounts in the debit column and the credit column. Fifth, you have to compare the totals. So finally check whether the total of debit is equal to the total of credit. So if the total matches, then the trial balance is set to tally. If the totals do not match, then it means that some errors exist in according records. Now let us see the nature of debit and credit balances. So students, you must also understand which accounts normally have debit balance and which account have credit balance. First of all, let us see the accounts which have debit balance. So basically, assets usually have debit balance. For example, it can include cash, bank, machinery, furniture, land building, debtors, bills receivable. So you have written all this: land building, plant. Expenses also have debit balances. For example, we have salaries, we have rent, wages, carriage inwards, as well as we have account with credit balances. So liabilities usually have credit balance. For example, we can have creditors, we can have bills payable, we can have bank loans. Okay. And income accounts also have credit balances. For example, sales account. Then we have commission received, discount received, interest received. So coming back to our topic, so even if the trial balance agrees, we had discussed that it does not prove that the accounts are completely correct. So some errors may still exist. For example, recording a transaction in wrong account, recording wrong amount in both debit as well as credit, omitting a transactions. So such errors cannot be detected by trial balance alone. Therefore, accountants must be careful while recording the transactions. Now we have clearly understood the meaning as well as format and preparation of trial balance. The next important question is, why exactly do we prepare trial balance? What are the objectives behind it, and how does it help us to locate errors? So these questions will be answered in our next topic. So our textbook basically explains three main objectives of preparing trial balance. First of all, we have to ascertain the arithmetical accuracy of ledger accounts. So this is the first and foremost important objective of preparing trial balance, to check the mathematical mathematical accuracy of ledger postings. A- as you know that the accounting follows the double entry system, so which means that the total of debit is equal to total of credit. So whenever a transaction occurs, it affects at least two accounts. One account is debited, another account is credited. For example, if goods are purchased for cash rupees 10,000, then we'll write purchase account debit rupees 10,000 to cash account credit 10,000. So now imagine a business that records hundreds of transactions every day. So during the posting process, the accountant might make a mistake such as posting the wrong amount, posting on the wrong side. It can also be missing a posting, or calculating the balance incorrectly. So, to ensure that the postings are mathematically accurate, accountants prepare a trial balance. So, what is happening in trial balance? Basically, all the debits, debit balances of ledger accounts, they are listed in the debit column, and all the credit balances are listed under the credit column. So, if the total of both the columns is equal, it indicates that the postings are arithmetically correct. However, there is one important limitation. Even if the trial balance agrees, it does not prove there are no errors. There may still be these errors that we discussed: recording transaction wrong amount, recording the same wrong amount on both the sides, and completely omitting a transactions. So such errors, basically it cannot be detected by the trial balance. So therefore trial balance only provides partial assurance of accuracy. Second, we have, it helps in locating the errors. So second objective is to help identify accounting errors. So if the total of debit as well as credit column do not match, it clearly indicates that some error has occurred. So the error may be at different stages of the accounting process. So according to this textbook, errors may occur during the totaling of subsidiary books, Then we have posting journal entries to the ledger. Then we have calculating the balances of ledger accounts, as well as we have carrying ledger balances to trial balance and totaling the trial trial balance columns. So let us understand these errors with example. First of all, we have error in totaling of trial balance. Sorry, error in totaling of the subsidiary books. Now suppose the total of the sales book, it should be rupees 50,000, but the accountant totals it as rupees 55,000. So this incorrect total, it will affect the sales account. It will affect the sales account in the ledger. Then we have error in posting. So suppose purchases of rupees 8,000 are posted in the ledger as rupees 800. So this will basically create a difference in trial balance. Then we have error in calculating the ledger balance. So if the debit side of an account totals as rupees 25,000 and the credit side totals as rupees 10,000, then the correct balance should be rupees 15,000. But if the accountant mistakenly calculates it as rupees 12,000, then an error occurs. Then there can be error in carrying balances. So while preparing the trial balance, a ledger balance may be written incorrectly. For example, we have the actual balance as rupees 9,000, then we have recorded in the trial balance as rupees 6,000. So this will basically cause a mismatch. Then we have error in totaling of the trial balance. So sometimes the accountant may incorrectly total the debit or the credit column. So this basically leads to a disagreement of the trial balance. So therefore, whenever the trial balance does not tally, the accountant must carefully check the books to locate as well as to correct the errors. Now let us discuss the important concepts as we studied. Even if the trial balance agrees, some errors may still remain undetected. For example, wrong account error. For example, we had machinery worth rupees 20,000 machinery, but we recorded it as furniture. So entry recorded is furniture account debit, cash account credit. Now here basically both the debit as well as credit are equal, so the trial balance it will tally, but the account classification is wrong. Second, we have equal wrong amount. Now suppose a transaction of rupees 5,000 is mistakenly recorded as rupees 500. So the entry recorded is purchases account debit rupees 500 to cash rupees 500. So even though the amount is incorrect, both the sides will match, so trial balance will still agree. So that is why accountants must carefully verify the records even after preparing the trial balance. Now the third objective that we have is it helps in the preparation of financial statements. So basically it facilitates the preparation of financial statement. How? Okay, let's see. First of all, let's understand what the financial statements include. Financial statements include our trading account, it includes profit and loss account, then we have balance sheet also. So these statements are basically prepared at the end of the accounting period to determine the profit or loss position of the business, the financial position of the business. So if the accountants had to check each ledger accounts individually while preparing financial statement, it would be extremely time consuming. So trial balance basically it simplifies this process. Since the balances of all the accounts are already listed in the trial balance, accountants can easily transfer them into the financial statements. For example, expense account, we have like wages, we have salaries, we have rent. So they are transferred to the trading or profit and loss account. Then we have income accounts like sales, commission received, then we have interest received. So they are all transferred to profit and loss account. Then we have the assets account like cash, we have bank, we have machinery, we have debtors. So they are all shown in the balance sheet. So liabilities are also there, like we have creditors, we have loans, so they are all shown in the balance sheet. So thus the trial balance basically acts as a link between the ledger accounts as well as the financial statements. So till now we have studied what a trial balance is and why is it prepared. Now an important question arises: how exactly do we prepare a trial balance? Okay, so because in accounting we may have many ledger accounts. For example, we have capital account, we have cash account, we have purchases account, we have sales account, we have debtors account, we have creditors account, expense account. So all these accounts contain many debits as well as debit and credit entries during the year. But when the accounting period ends, we need to summarize all these accounts into one statement, and this statement is called as the trial balance. So the process of preparing this statement is called as preparation of trial balance. Now let us see the meaning of preparation of trial balance. Okay, so trial balance preparation, it means collecting collecting the balances or totals of all the ledger accounts and arranging them into one statement to verify equality of debit and credit. So basically the steps are, first of all we have to identify all the ledger accounts. Then calculate we have to calculate the totals or the balances. Then we have to place them in trial balance. Lastly, we have to check if the debit equals credit. So this basically ensures that double entry accounting has been followed correctly. Now let us discuss the three methods of preparing trial balance. So according to our book, trial balance can be prepared using three methods. First of all, we have totals method, we have balances method, as well as we have totals come balances method. So first of all, we'll discuss each method in detail. So totals method. So under this method, basically, we take the total of debit side of each ledger accounts, total of credit side of each ledger account. Then we write those totals. We write the totals in trial balance. So instead of writing the balances, we write the total amount. Let us see one example. For example, we have cash account, debit side. Okay, we have opening balance rupees 10,000. We have sales rupees 5,000. So total debit equal to rupees 15,000. Credit side, we have purchases rupees 7,000. So total credit 7,000. So under the totals method, we will write debit total equal to 15,000, credit total equal to 7,000. So let us make the trial balance based on totals method based on the example we just discussed just now. So in this method, we know we do not take the balances. Instead, we take the total. We take the total of debit side and total of credit side of each ledger. So we discussed we have to write the cash account. We have to make the cash account and we have to place all the entries there. So on the debit side, credit side, we had the amount. We had opening balance of rupees 10,000. We had sales. We had sales of rupees 5,000 and purchases rupees 7,000. So total comes out to be 15,000 and 7,000. So here debit total was 15,000 and the credit total was 7,000. So in step 2 we had the sales account. We had sales account because we know cash sales of rupees 5,000 occurred. So the entry would be cash account debit to sales account. So sales account would become no debit, credit, cash we had 5,000. So here the total credit is rupees 5,000. Third, we'll prepare purchases account. Purchases account. So since 7,000 purchases were made using cash, so the entry would be purchases account debit to cash. So purchase account would be debit, credit to cash 7,000. So here the total debit would be total debit would be 7,000. Now last we'll prepare the trial balance. So we'll take the total of each account. We have the account title, we have the debit total, we have the credit total. First of all, we have cash account. Cash account debit total is 15,000 here and credit total is 7,000. Purchases account is 7,000. Sales account is 7,000. So we'll total the columns. The debit column total is 22,000 and credit column total is 12,000. So the one important note is that here the totals do not match because this example only shows one account fully, like we have cash account and partial information about the account. So in real accounting situation, basically all the ledger accounts must be included to make the trial balance equal. So under the totals method, basically we take the total debit of ledger account, we take the total of credit of ledger account and not the balance. So basically in the totals method, what we take the total of both sides, whereas in balances method, we take only the balances. Now there are some disadvantages of totals methods. So the basically in our book mainly the advantage is that it's not widely used in practice. Why? Because it does not show the actual balance of the accounts. And financial statements, we know it requires balances and not the totals. So that is why accountants prefer another method. So next we have the balances method. So coming to one of the most important methods, so this is the method which is used in real accounting practice. So under the balances method, instead of totals, balance, we take the balance of each ledger account. So balance basically means the difference between debit as well as credit side. Now suppose we have machinery account, we have on the debit side we have 20,000, the debit side we have 20,000, on the credit side we have 3,000. So basically the balance would be rupees 17,000. So this balance will appear in the trial balance. Now let's see the steps to prepare trial balance using balances method. So step 1, we have to find the balances balance of each ledger account. Step 2, we have to identify whether the balance is debit or credit. Step 3, we have to write the account name. Step 4, we have to place the balance in debit or credit column. Then what we have to do? We have to add all the totals. And step 6, we have to check if the totals match. Now, why is balances method preferred? So, balances method basically it represents the net position of the accounts. For example, we have we have purchase balance, expense, sales balance, we know its income, and cash balance, we know its asset. So these balances are directly used to prepare the trading account. It's used to prepare the profit and loss account as well as balance sheet. So that is why balance method is widely used. Next we have the totals come balance method. So the third method we have is totals come balances method. So as the name suggests, it's a combination of both the methods. So in this method, we'll show the debit total, we'll show the credit total, we'll show the debit balances, we'll show the credit balances. So that means 4 columns of amount. Format is account, debit total, credit total, debit balance, credit balance. For example, like cash account, we have debit total rupees 15,000, we have credit total rupees 7,000, so balance is rupees 8,000. So we write the debit total 15,000, we write credit total 7,000 as well as debit balance as 8,000. Now why is this method not used? So this method is rarely used in practice. The reason is it's time consuming and it does not provide any extra benefit. So therefore the accountants prefer the second method, that is the balances method. Now let us see one example that has been given in a book. So let us now learn how will the trial balance be prepared using each of these methods with the help of the following account. We have Mr. Rawat's ledger, which shows the following accounts for his business. Help him in preparing the trial balance using the totals method, balances method, as well as totals come balance method. So basically, a practical example of Rawat's ledger accounts are given, and the accounts we can see, we have the capital account, we have Rohan's account, we have machinery account, Rahul's account, sales account, cash, wages, depreciation. We have purchases, then trial balance using all the three methods have been prepared. Okay, so let us start with the first one. Okay, so Rawat's capital account. Okay, so just leave this balance carried down thing. Okay, so here we have balance brought down as well as cash account. So we know the credit total here is rupees 60,000. So this 60,000, we'll write it here. Rawat's account, in credit total we have written 60,000. And here in Rohan's account we have balance brought down, we have purchases. So the credit total here is 60,000. So here we have written 60,000, and we had one debit entry here also, cash 40,000. So here just leave this carry down thing. So the total here is 40,000. So we'll write this 40,000 here in debit side of Rohan account. Then we have machinery account. So machinery depreciation, we have charge rupees 3,000. So this will be a credit total. Here we had balance brought down 20,000. So on the debit side we have written 20,000, on the credit side we have written 3,000. Same like here, Rahul, we have sales, we have brought down, we have sales. So debit side total is 75,000. Credit side we have one entry 55,000. So we'll write here 55,000 and 75,000. So for other accounts also you have to do the same. Then we have trial balances using balances method. Okay, so in this we have to straight away take the balances of each account. Let's erase this. So we had total 60,000. So the balance carried down was 60,000. So this 60,000 we are going to take. Here we have balance carried down 20,000. Here we had charge depreciation 3,000. Brought down was 20,000. So our balance carried down is 17,000. So this balance carried down we have to take, and we'll post it on respectively on the debit side as well as credit side. Trial balance using totals come balances method. So this is just a combination of your first and second method. Now let us solve this test your understanding question. Okay, so in this we have to indicate against each amount whether it's a debit or a credit balance and prepare a trial balance as on March 31st, 2014 based on the following balances. So in this, first of all, we have to identify whether each item has a debit or credit balance. So the rules are, for the assets as well as the expenses, you have debit balance. For liabilities, for capital as well as for income, you have credit balance. For drawings, we have debit, creditors, credit, debtors, debit, sales return, debit, purchase return, credit. Okay, so let's classify each item. First of all, we have the capital account, rupees 1 lakh. So capital account, we know its nature is capital, so it will be credit. Then we have drawings. Drawings, we know it's debit. Machinery, it's an asset, so debit. Sales is income, so credit. Then we have purchases, expense, debit. We have sales return. We have sales return. It's return inward, so it's debit. Then we have purchase return. It is return outward, so it is credit. Then we have wages. Wages is an expense, so it will be debit. And then we have goodwill. Goodwill is an asset, so debit. Debit. Interest received is an income, so credit. Discount allowed. Rupees 6,000, it's an expense, so debit. Bank overdraft 22,000, it's a liability, so credit. Bank loan is a liability, credit. Debtors, we know it's asset, so debit. Creditors, credit. Cash is an asset, debit. And stock is an asset, so debit. Then next we have cash, stock also debit. Okay, so next we'll prepare the trial balance. We have the account title, we have debit, we have credit. So we'll write here, like we have drawings, 16,000, we have machinery rupees 20,000, we have purchases rupees 2,10,000, we have sales return 20,000, we have wages 40,000, goodwill 60,000, discount allowed 6,000, debtors Nathu 55,000, rupa 20,000, cash 54,000, opening stock 16,000. So likewise you'll write credit side also, like capital 1 lakh, sales, purchase, return, everything. So we'll write it here also. Step 3 will total all the debit as well as credit. So the debit total, basically it comes out to be 5,17,000. Credit total also will come out to be rupees 5,17,000. So the trial balance in short will tally. So after preparing the trial balance, the accountant has to check whether the total of debit is equal to the total of credit. So if both the totals are equal, we can say that the trial balance agrees, or we can say that the trial balance tallies. But an important point to understand here is that the agreement of trial balance does not guarantee that all the accounts are correct. It only confirms the arithmetical accuracy of the ledger postings is correct or not. Now let us understand what does agreement of trial balance indicate. So when the trial balance total matches, it indicates that every debit entry has a corresponding credit entry. So posting from the journal to ledger has been done mathematically correct. So this means that the double entry system is basically maintained. However, it does not mean that there are no mistakes in accounting records. Some errors may still go unnoticed. Now, why does trial balance may still contain errors? Let us see. Even if the trial balance tallies, so errors can still exist. This happens because some mistakes do not disturb the equality of debit as well as credit totals. Okay, suppose we have goods they were purchased for rupees 5,000 from Ram. So the correct entry should have been purchases account debit 5,000 to Ram account 5,000. Suppose the accountant records purchases account debit to Sham account. 5,000 only. So here the debit is equal to 5,000, the credit is also equal to 5,000. So the trial balance will still tally. But the entry is wrong because the wrong account was credited. So this type of mistake will not be detected through trial balance. Now let us see some of the common errors that affect the trial balance. So we have many errors have been listed here. So let's start. First of all, so these errors basically it may arise during the different stages of accounting process. First of all, we have error in totaling the debit and credit balance in the trial balance. Okay, so the accountant may basically incorrectly add the debit column or the credit column, so the results in mismatch. Then we have error in totaling of the subsidiary books. So subsidiary books, we know it includes sales book, it includes purchase book, it includes cash book, it includes returns book. So if the totals of these books are calculated incorrectly, so the trial balance will be wrong. For example, the actual purchase is rupees 50,000, but it is recorded as rupees 45,000. So this causes an error in trial balance. So the third thing we have is error in posting of the total of subsidiary books. So after recording the transactions in subsidiary books, the totals are posted to the ledger accounts. So if the posting is incorrect, the trial balance will not match. For example, we have sales book total rupees 20,000, but the accountant posts only rupees 2,000 to sales account. So this basically creates error. Then we have error in placing balance in the wrong column of the trial balance. So sometimes the accountant writes an amount in the wrong column. For example, wages rupees 5,000, it's debit balance, but mistakenly we have placed it in the credit column. So this creates a difference of rupees 10,000 in trial balance. Then we have omission in showing an account balance in the trial balance. So sometimes an account balance is not included in the trial balance. For example, machinery account balance is rupees 25,000, but accountant forgot to include it. So this causes mismatch. Mismatch. Then we have error in calculating ledger balances. So balances of the ledger accounts must be calculated correctly. For example, on the debit side we have 50,000, on the credit side we have 30,000. So the correct balance would be 20,000. But if it is calculated wrongly as 15,000, then trial balance will be wrong. Then we have error in posting of journal entry. So posting from journal to ledger must be accurate. So possible mistakes include posting posting to posting wrong amount, posting on wrong side, and posting to wrong account. For example, rent paid is rupees 5,000, so the correct entry would have been rent account debit 5,000 to cash 5,000. So but the accountant posts it as rent account debit to cash rupees 500. He forgets one zero. So this basically causes error. Then we have error in recording the transactions in journal. So the transactions may be recorded incorrectly in the journal. For example, wrong amount, wrong amount is recorded, debit and credit they are reversed. For example, suppose we have cash received rupees 2,000, so the correct entry would be cash account debit. We have received this from debtors, so debtors would decrease 2,000 and here 2,000, but instead we wrote it as debtors account debit 2,000. So instead of getting cash from debtors, we are increasing the debtors. So this is basically a reverse entry. Then we have error in recording the transactions in subsidiary books. So sometimes the wrong name or the wrong amount is recorded. For example, goods sold to Ram rupees 10,000, but it is sold in the sales book as goods sold to Sham 10,000. So trial balance will still tally, but the account is incorrect. Next, we have classification of errors. So accounting errors are basically classified into four categories. We have error of commission, we have error of omission, principal, as well as compensating errors. We'll study each of them in detail. First of all, we have error of commission. So these mistake basically it occurs due to the carelessness or due to clerical errors or mistakes. For example, we have posted to posting to wrong account, posting wrong amount, we have done wrong totaling. So everything is just wrong here. Wrong balancing. For example, we had to make payment to supplier rupees 25,000, but we have posted it as supplier account debit rupees 2500. We forgot 10 here. So this is an error of commission. So these errors basically it affects trial balance. Next we have error of omission. So the second type of error is error of omission. The word omission means we are forgetting or we are leaving something out. So therefore the error of omission occurs when a transaction is not received in the books of accounts. So this may happen in two ways. It can either be a complete omission or it can be error of partial omission. So complete omission, in this case the transaction is completely ignored. It is not recorded anywhere in the books. For example, goods purchased for rupees 10,000, it is completely forgotten and it is not recorded in the purchase book. Since both the debit and credit are missing, so the trial balance it will still agree, but the accounts will be incorrect. Then we have partial omission. So in partial omission, the transaction is recorded partially. So that means that it is entered in one book, but it is not posted to the ledger account. For example, goods sold to Ram rupees 8,000, it is recorded in the sales book, but Ram's account in the ledger is not posted. So here one side is missing. So the trial balance will not tally. Next we have error of principle. So in error of principle, basically these errors occur when the accounting principles are violated or ignored. So in accounting, we classify the accounts into capital expenditure, we have revenue expenditure, we have assets, we have expenses. So if the accountant records a transaction in the wrong category, it becomes a wrong category. It becomes an error of principle. Now let us see an example. Suppose we have a business purchases a machinery for rupees 20,000. So machinery is an asset, so the correct entry should have been machinery account debit rupees 20,000. I'm writing the short form here, but in exam you have to write the full form. Like machinery, you have to write full. To cash rupees 20,000. So if the accountant records it as, instead of machinery records purchases account debit 20,000 to cash 20,000. So then machinery is treated as a purchase expense instead of an asset. So this is basically violating the violating the accounting principle. So therefore it is called error of principle. So important point to note here is that even though the entry is wrong, but the trial balance will still agree because the debit and credit are equal. Then we have compensating errors. So another interesting type of error is compensating error. So these errors occur when two or more errors cancel each other's effect. So because of this cancellation, the trial balance still agrees even though the mistake persists. Now let us discuss some example of this compensating error. Suppose the following mistake occurs. Wages account, it is understated by rupees 500, and rent account, it is overstated by rupees 500. So both the errors basically they are cancelling each other, so the trial balance still balances, but the accounts are incorrect. Next topic we have is searching of errors. So what does searching of error means? Searching of error means systematically checking the accounting records to identify whether mistake has occurred or not. So whenever the trial balance does not tally, so the accountant must carefully examine the books of accounts and follow certain procedures to detect the error. So here we'll explain the several practical methods which is used by the accountants to find the errors. Step 1 we have is, first of all we have to recalculate the totals of the trial balance. Okay, recast the totals of debit and credit columns of the trial balance. So sometimes the difference occurs because of a simple mistake in addition. For example, the debit column actually totals out to be rupees 1,50,000, but due to an adding mistake, it was written as 1,45,000. So in this case, the trial balance will not tally. So therefore, the accountant must recheck the addition of both the columns carefully. Second, we have to complete the trial balance with we have to compare the trial balance with ledger accounts. So the accountant should compare the account titles, the amount which is shown in the trial balance with those in the ledger account. So this basically it helps us to find out the missing accounts, incorrect amount, as well as accounts that were not included in the trial balance. For example, we have machinery account balance rupees 30,000. It exists in the ledger, but it was not included in the trial balance. So then the trial balance will not agree. So therefore, comparing with ledger accounts basically helps detecting omissions. Then we have to compare the trial balance. We have to compare the previous year's trial balance. So comparing the current year's trial balance with previous year trial balance basically helps us to check whether any account has been omitted or not, and whether there are any unusual increase or decrease in balances. For example, if last year the wages was rupees 50,000 and this year it suddenly shows that rupees 5,000, so it may indicate an error. So this comparison with the previous year it helps to identify any unexpected difference. Fourth, we have to recalculate the balance of ledger accounts. So the accountant should also recalculate the balance of each ledger. So sometimes the errors occur during the balancing of ledger accounts. For example, the debit side total is rupees 20,000, the credit side total is rupees 12,000, and the correct balance should be rupees 8,000. But if the accountant mistakenly it writes as rupees 6,000, so the trial balance will not match, and therefore each ledger balance should be rechecked carefully. Step 5, we have checked the posting from original books of entry. Next step is to verify the posting from the books of original entry. Books of original entry include journal, we have sales book, we have purchase book, we have cash book, returns book. So the accountant must ensure that all the transactions they have been posted correctly to the ledger accounts. For example, if sales book it shows rupees 10,000, but only 1,000 was posted to the sales account, then the trial balance will differ. Next is the difference divisible by 2. So another careful clue is to check whether the difference between debit as well as credit is totals is divisible by 2. So if the difference is divisible by 2, may indicate that the amount has been posted on the wrong side of the ledger. So let us see the example that has been given here. Suppose the trial balance difference is rupees 1500. 1500. So half of this amount is rupees 750. So this means that an entry of 750 might have been posted to the wrong side. For instance, a credit entry of rupees 750 has been posted to the debit side, or so therefore the accountant should search for the entries of 750 in the ledger. Step 7, we have check for the omitted posting. So the difference in the trial balance may indicate that one side of the transaction was not posted. For example, suppose the difference is rupees 1500, so this could mean that 1500 was posted on one side but it was omitted on the other side. So therefore the accountant should verify whether entry of 1500 has been missed. Then we have check if differences is divisible by 9. Another common mistake in accounting is transposition of numbers. So this happens when the digits are reversed. For example, instead of writing 459, the accountant has written 954. So the difference becomes 954 minus 459 equal to 495. So this is basically divisible by 9. So therefore, if the trial balance difference is divisible by 9, it may indicate transposition of digits, transposition of digits, as well as wrong placement of the decimal point. Now let us discuss a quick summary of this. Searching for errors, basically it involves the following step. First of all, we recalculated the trial balance totals. Second, we compared the trial balance with ledger accounts. Third, we compared with previous year trial balance. Fourth, we recheck ledger balances. Fifth, verify posting from books of original entry. Then check if difference is divisible by 2. Check if difference indicates omission. Then check if difference is divisible by 9. So these methods basically help the accountant to detect mistakes quickly. Next we have rectification of errors. So rectification simply means correcting the mistakes that have occurred in the books of accounts. So whenever errors are discovered, the accountant must correct them immediately so that the accounts show true and correct financial position of the business. So rectification of errors can be done in different stages of accounting depending on whether the error is discovered. So let us see when the error can be identified. So when the errors can be rectified. Errors can be rectified at 3 stages. So these stages are, first of all, we have the rectification of the errors discovered before preparing trial balance. Then we have errors discovered after preparing trial balance. Then we have errors discovered after preparing the final accounts. So each stage has a slightly different method of rectification. Now let us understand. Uh, First of all, we have rectification of errors which do not affect the trial balance. So first, suppose the accountant discovers the mistake before preparing the trial balance. In this case, the rectification is simple. The accountant can directly correct the entry in the ledger or journal. So basically, there is no need for any special or adjusting entry. For example, suppose wages of rupees 5,000 were wrongly posted as rupees 500. So the accountant can simply correct the amount in the ledger before preparing the trial balance. So thus the mistake is corrected immediately. Then we have rectification after preparing the trial balance. So now suppose the trial balance has already been prepared and the totals do not match. So this means that the some errors still persist. So in such cases, the accountants usually open a temporary account which is called as suspense account. Now what is suspense account? Suspense account is basically it's a temporary account which is used to balance the trial balance when totals do not agree. So the difference between the debit total and credit total is temporarily placed in this account. For example, the debit total is rupees 1,50,000 and the credit total is rupees 1,47,000. So the difference is rupees 3,000. So to make the trial balance equal, a suspense account of rupees 3,000 is added to the credit side. So later when the errors are discovered, the rectification entries are passed and the suspense account is cleared. So thus the suspense account acts as a temporary placeholder for the difference in trial balance. Next we have rectification after final accounts. So sometimes the errors are discovered after they are they are discovered after the financial statements have already been prepared. So in such cases the correction cannot be made directly in the books. Instead, rectification rectification entries must be passed through the journal. So these entries adjust the accounts they adjust the accounts without disturbing the previously prepared financial statements. However, such corrections must be carefully recorded because they may affect the profit and loss of the business. Now, an important principle in rectification is that while rectifying the errors, the accountant must follow an important rule. Every rectification entry must correct the wrong entry and bring accounts to their correct position. So this basically means that the rectification entry it should cancel the incorrect effect and record the correct effect. So thus the accounts become accurate. Example of rectification is, let's understand. Suppose goods sold to Ram for rupees 5,000, they were recorded as rupees 500. So this means that the amount was understated by rupees 4,500. So to rectify this error, the accountant must increase the amount by rupees 4,500. So the rectification entry would be Ram account debit 4,500 to sales 4,500. So the adjustment basically corrects the mistake. Now let us understand why rectification is important. Now rectification of errors is important because incorrect accounting it may lead to wrong profit calculation. It may lead to incorrect financial statement. It may lead to misleading financial information. So therefore the accountants must carefully identify as well as they have to rectify these errors whenever they are detected. Now let us see the procedure for rectification of the errors with the help of the following example. So in the first example, credit sales to Mohan rupees 10,000. They were not recorded in the sales book. So this is an error of complete omission. So its effect is that Mohan's account has not been debited and sales account has not been credited. So accordingly, recording usual entry for credit sales will rectify the error. Now let us see what the actual transaction was. So goods were sold to on credit to Mohan for rupees 10,000. So this means that the Mohan has not paid cash yet. He will pay later. So Mohan becomes the debtor of our business. So what should have been the correct entry? Correct entry should have been Mohan account debit 10,000 rupees to sales rupees 10,000. So the reason is Mohan is receiving the goods, so debit Mohan, sales is an income, so credit sales. Now, what mistake happened here? The mistake that was happened here is the transaction was not recorded in the sales book. So this means that the accountant completely forgot to record this transaction. So nothing was entered in the book. So therefore the Mohan account was not debited and sale account was not credited. So this is just a complete error of complete omission. So what is the effect of this error? Effect of this error is because the transactions were not recorded, so Mohan's account should increase by rupees 10,000, but it did not increase. So it was not recorded, so both the accounts were wrong. Now how do we rectify this error? So since the transaction was completely omitted, we simply record the normal entry. We record this entry, that is the rectification. So so important concept here is that whenever a transaction is completely omitted, the rectification is easy. You simply need to just pass the original journal entry. No suspense account is required because both the debits as well as credits were missing, so the trial balance is not affected at all. Next we have example B. Credit sales to Mohan rupees 10,000 were recorded as 1,000 in the sales book. So this is basically an error of commission. The effect of wrong account is shown here. Okay. So whenever because 1,000 we know, instead of 1,000 we have recorded as 10,000. Sorry, 1,000 was recorded instead of 10,000. So entry passed we know was Mohan account debit to sales account rupees 1,000. So Mohan was debited by only rupees 1,000 only. So what should have been the correct entry? The correct entry should have been Mohan's account debit 10,000 to sales account 10,000. So you have to just find the difference here. The correct amount is rupees 10,000 and you recorded only 1,000. So you have to record 9,000 more. So Mohan's account, it needs additional debit of rupees 9,000. Sales account needs additional credit of rupees 9,000. So the rectification entry comes out to be Mohan account debit 9,000 to sales account 9,000. So this increases both the accounts by 9,000 so that the total becomes 10,000. Next we have credit sales to Mohan rupees 10,000. It was recorded as 12,000. So this is an error of commission. Okay, so you have 2,000 extra you have recorded. Mohan's account 12,000, sales 12,000. Correct entry should have been instead of 12,000 you should have recorded only 2,000. So basically you have recorded an excess of rupees 2,000. So Mohan has an extra debit of rupees 2,000 and sales account has an extra credit of rupees 2,000. So in order to remove the excess amount, you have to just reverse this. So sales account will debit 2,000 and Mohan's account credit rupees 2,000. So why this works? Because we know sales account had an extra credit of rupees 2,000. So to we debit the sales to reduce it, and Mohan had an extra debit of 2000, so we credit Mohan to reduce it. So simple rule is that whenever amount is recorded less, then you just add the difference, and when the amount is recorded is more, then you remove the excess. Next we have credit sales to Mohan 10,000. It was recorded in sales book but was posted to Ram's account. So the effect of wrong posting has been, okay, credit sales to Mohan was correctly recorded in the sales book but posted to Ram's account. So Ram's account you have debited to sales account. So instead of Ram, actually Mohan should have been debited. So notice that look, this part we have recorded it correctly. So sales account, there's no error in sales account, but Ram's account has been debited. So there's an excess in Ram's account, and Mohan's account we have not at all. We have completely omitted that. So we will debit Mohan's account, which we should have done earlier, and we'll credit Ram's account to remove the excess debit. Next, we have rent paid of rupees 2000 was wrongly shown as payment to landlord in the cash book. So, landlord account we have debited to cash account. Correct entry, rent is an expense. Expense should have been debited 2000. So, here the cash is not affected. Cash is correct. So, rent actual expense we will debit, and landlord account credit to remove the excess debit of landlord account. Next, we have test your understanding. Okay, so record the rectification entry for the following transactions. Credit sales to Rajni rupees 5,000 recorded in purchase book. Now, first of all, let us see the type of error. This is an error of principle. Because the sales were recorded, the sales were wrongly treated as purchases. So the wrong entry has been purchase account debit rupees 5,000 to Rajni account rupees 5,000. The correct entry should have been Rajni account debit to 5,000 because Rajni is our debtor. To sales rupees 5,000. So the rectification would be so here the rectification would be Rajni account debit 10,000 to purchases account we have 5,000 to sales account we have 5,000. Okay. So basically Rajni was wrongly credited by rupees 5,000 here, and the correct entry should have been 5,000. So this 5,000 is for the correct entry, and the excess credit of 5,000 is there, so for that we have to pass debit entry for that. So 5,000 plus 5,000, so total in Rajni account will debit by 10,000. And to purchases we have an excess of in purchases account we have excess debit of rupees 5,000, so we'll credit it here for rectification. And sales, this is the correct entry which should have been passed, so we'll pass this entry. Next we have furniture purchase from Messrs. Rao Furnishing for rupees 8,000. It was entered in the purchases book. Okay, so first of all, this is a type of error of principle. So reason why? Because furniture we know it's a fixed asset, but it was treated as a purchase of goods. So this is an error of principle. So state the wrong entry recorded in the books of accounts. We have recorded it as purchases account debit rupees 8,000 to Rao Furnishings account rupees 8,000. Correct entry should have been furniture account debit rupees 8,000 to Rao Furnishings rupees 8,000. So rectification basically, So correct entry should have been furniture debit. So the rectification would be furniture account debit rupees 8,000. This is the wrong entry. We have excess debit in purchases account. So to reverse the effect, we'll reverse this entry. So to purchases account 8,000 rupees. Next we have cash sales to Radhika rupees 15,000. It was shown as receipt of commission in the cash book. So this is an error of commission. Reason, because the sales income, it was recorded as commission income. Why is it error of commission? Because error of commission occurs when the correct amount is recorded here, the correct side debit credit is used, but the wrong account is being used. Let's see the wrong entry that was recorded. We had cash account debit rupees 15,000 to commission rupees 15,000. Let us see the correct entry. It should have been cash account debit 15,000 to sales rupees 15,000. So the rectification entry would be commission account debit 15,000 to sales 15,000. Because commission was wrongly credited, so we'll debit the commission, and sales should have been credited, so we'll credit the sales. Next question we have cash received from Kareem rupees 6,000 posted to Nadeem. So this is also an error of commission. Why? Because the correct amount was recorded, but it was posted to the wrong person's account, Nadeem instead of Kareem. So wrong entry recorded is cash account debit rupees 6,000. We have to Nadeem rupees 6,000. Okay, so the accountant credited Nadeem's account instead of Kareem's account, and the correct entry should be cash account debit. We have rupees 6,000 to Kareem's account rupees 6,000. Because cash has been received from Kareem, means Kareem's account should be credited. The rectification entry would be Nadeem account debit. We have rupees 6,000. Then we have to Kareem account rupees 6,000. So here we must remove the wrong credit from Nadeem. So we'll debit Nadeem and we'll correct credit, give correct credit to Kareem. So we have credited. So the correction basically transfers the amount from Nadeem to Kareem. Okay, so till now we have studied that some errors do not affect the trial balance, some errors do affect the trial balance, and when errors affect the trial balance will not agree. In such a situation, the accountant temporarily makes the trial balance agree by opening a special account which is called as the suspense account. Next, we're going to understand the rectification of errors affecting trial balance. We'll understand one-sided errors, suspense account, as well as rectification entries using suspense account. So first of all, we'll start with this rectification of errors affecting trial balance. So these are basically the errors that affect only one account. So because only one side is affected, so the trial balance, it will not tally. Examples include error of casting, error of posting, we have error of balancing, we have error of carrying forward, we have posting to wrong side, we have omission of posting. So let us understand this one by one. First of all, we have one-sided errors. So when an accounting entry affects only one side, it is called as one-sided error. For example, suppose sales are rupees 10,000. So correct entry should have been debtors account debit rupees 10,000 to sales, rupees 10,000. But imagine the accountant posts the entries only to the sales account and he forgets to post it to the debtors account. So now the sales account it is recorded, but the debtors account has not been recorded. So only one side is affected. So this basically causes difference in trial balance. Then we have corrections in books of original entry. So if an error is found before posting to ledger, it can be corrected directly in the books of original entry. So accountant basically crosses the wrong amount with a single line and writes the correct amount above it and initials the correction. So but once the entry is posted to ledger, it cannot be erased. Why? Because accounting records must remain authentic as well as transparent. So erasing the entries may give the impression that something is hidden. So therefore corrections must be done by passing proper rectification entries. Now let us take this example. For example, a case where Sham's account was credited short by rupees 190. So this will be rectified by an additional entry for rupees 190 on the credit side of his account as follows. Okay, so this simply means that Sham's account should have been credited more. So we are making an additional entry on the credit side. So in Sham's account, we have written this, the difference in amount posted short rupees 190. We are adding this missing amount. So this method basically corrects the account without deleting the earlier records. We have another example. Suppose purchases book was undercast by rupees 1000. So undercasting means the total was calculated less than the correct amount. Like the actual purchases, suppose the actual purchases was rupees 11,000 and you recorded it as rupees 10,000. So the difference here is rupees 1,000. So since the purchase account is a debit account, so the missing amount it must be debited. So we write in purchase account debit rupees 1,000. Narration we'll write under casting purchases account book for the month of dash dash dash. Next we have suspense account. Okay, so suspense account basically, suppose the trial balance totals are debit totals we have rupees 35,000, we have credit total of rupees 50,000. So there's a difference of rupees 15,000. So until the errors are located, the accountant temporarily places the difference in suspense account. So it is used only until the errors are found as well as corrected. Now let us look at the example which has been given in the book. So the sales book here shows the following credit sales. Ashok Traders rupees 20,000, Bimal Service Center 10,000, Chopra Enterprises 5,000, Divakar Sons 15,000. So the total sales is 50,000. Okay, so if the sales to Divakar and Sons were not posted, if this one, if it was not posted to his account, then the ledger will show the following. Ashok Traders, this 20,000 we are having, correct? Bimal, we are having 10,000, Chopra 5,000. Sales account 50,000. But since this error has occurred, if the entry for the Vakar and Sons 15,000 was not posted, that means that the ledger would contain only Ashok Traders rupees 20,000, Bimal Service 10,000 and Chopra Enterprises 5,000. That is, the total posted would be rupees 35,000. But the sales account shows rupees 50,000. Yeah. So this will cause a difference of rupees 15,000 in trial balance. So the trial balance total would be debit side. Total we would have 35,000 and on the credit side we would be having rupees 50,000. So the difference would be rupees 15,000. So to make the trial balance agree, we'll create a suspense account. We'll create a suspense of account of rupees 15,000. Now please note that suspense account, it is not a permanent account. It is not an asset. It is not a liability. It is not an income, and it is not an expense. It is simply a temporary account which is used to balance trial balance. Okay. So once the errors are found, the suspense account will be closed. Next, we have rectification process using the suspense account. Okay, so here we have the step by steps. We have the steps to rectify one-sided errors. So let's see the step. First of all, we'll identify the account. We'll identify the account that has been affected. Next, we'll find the amount of error. Third, we will determine whether there is excess debit or excess credit, or this short debit or short credit. Then here we'll pass the rectification entry. Then we'll adjust the suspense account if necessary. Now let's see a example. We'll now discuss the process of rectification using suspense account. Okay, here we have credit sales to Mohan rupees 10,000. It was not were not posted to his account. So this is an error of partial omission committed while posting entries to the sales book. So here the correct entry should have been Mohan account debit rupees 10,000 to sales rupees 10,000. But here they are telling us that Mohan's account was not debited. So this basically it causes a short debit in Mohan's account. So to correct this entry, we'll pass a rectification entry of Mohan's account debit rupees 10,000 to suspense account rupees 10,000. So this basically removes the trial balance difference. Next we have credit sales to Mohan 10,000. It was posted to his account as rupees 7,000. So this is an error of commission. Mohan's account has been debited with 7,000 instead of 10,000. So there has been basically a short debit of 3,000. So this is the actual entry that has been passed. Mohan's account debit to sales 7,000 7,000. Correct entry should have been 3,000 should have been more. So rectification will pass 3,000 extra debit Mohan's account debit, and suspense account credit rupees 3,000. Next we have credit sales to Mohan rupees 10,000. It was posted to his account as rupees 12,000. So there has been an excess debit of 2,000 in Mohan's account. So this is the actual entry. Mohan's account debit 12,000 to sales 10,000. Okay. So correct entry should have been Mohan's account debit 10,000 to sales 10,000, and so the rectification would be suspense account debit 2,000, Mohan's account 2,000. Next we have purchase book has been overcast by rupees 1,000. Errors in casting of subsidiary books affects only those accounts where totals of the subsidiary books involved are posted. So here the accounts of individual parties are not affected. For example, here we have purchases book. Okay, so here we have purchases book was overcast by 1,000. So like Dhiru we have 8,000, Chandraprakash 7,000, Sachin 6,000. So the actual total should have been 21,000, but we did the wrong totaling of 22,000. So we have basically this is overcast by rupees 1,000 rupees. So Dhiru's account, the amount has been correctly posted here, but in purchases account wrong amount has been posted. So as you can notice, there is no error in these three accounts. Only purchases account has been debited with 1,000 extra. So what will be the rectification? So there's an excess debit in purchase, so we'll credit it to remove the excess debit, and we'll debit the suspense account. So now we are going to study about rectification of errors in the next accounting year and the guiding principles of rectification of errors. So we know that in practical accounting, it is quite common that some mistakes it remains unnoticed during the accounting year. So even after preparing the trial balance and the financial statements, certain errors may still exist in the books of accounts. So therefore, the accountants must understand how to correct these errors properly without disturbing the accounting system. So here we'll discuss two main topics, this one and rectification of errors. So rectification of errors in next accounting year. So sometimes errors committed during an accounting year we know are not detected immediately. So this means that the financial statements for the year are already prepared and the accounts have been closed. So now the question arises, what happens if we discover the error in next accounting year? So in such a situation, the suspense account cannot be closed in the same year. So instead, its balance is carried forward to the next accounting period. So this means that the suspense account continues to exist in the books until the error is located. Now let us see the role of suspense account. So let's recall what we have learned earlier. When the trial balance does not tally, the difference is temporarily placed in suspense account. For example, we studied if the debit side total is 1,20,000, credit side total is rupees 1,15,000, so the difference is rupees 5,000. And to make the trial balance agree, we'll create a suspense account of rupees 5,000. But now the trial balance matches, but the suspense account represents unknown errors. Now, suppose the error is discovered in the next accounting year. So in this case, the correction cannot be made directly in the income or expense account of the previous year. Why? Because the previous year's profit and loss account has already been finalized, and if we make corrections in the income or expense account now, it will affect the profit of the current year also, which is incorrect. So therefore, instead of using income or expense account, we use a special account called profit and loss adjustment account. So this account basically helps us to adjust the errors without affecting the profit profit or loss of the current year. So purpose of profit and loss adjustment account. The purpose of profit and loss adjustment account is to ensure the errors of previous year they do not affect the profit of the current year, and instead the correction is made through profit and loss adjust account, which adjusts the capital of the business. Now let us see what the guiding principles of rectification of errors are. So these principles basically help the accountants to determine how to correct the different types of mistakes. Okay. So principle 1 we have, if an error is committed in the books of original entry, assume that all the postings were made accordingly. So the books of original entry, we know it includes sales book, it includes purchase book, it includes cash book, it includes journal. So if an error occurs here, it means that the same error will automatically be carried forward to the ledger. Let's see an example here. For example, if the sales of rupees 5,000 is wrongly recorded as rupees 500 in the sales book, so the ledger posting will also be rupees 500, so which will reflect the so therefore while rectifying we'll assume that the ledger reflects the same incorrect amount. Principle 2 we have, if the error occurs during posting, assume that the recording in subsidiary books is correct. So posting means transferring the entries from the books of original entry to the ledger. For example, sales book has been correctly recorded as 10,000 sales to Mohan. But while posting to the ledger, the account forgot to debit Mohan account. So here the sales book is correct, only the posting is wrong. So while rectifying, we'll assume that the original record was correct. Principle 3 we have, if posting is made to wrong account, then we have to assume that the posting was done on the correct side with correct amount. For example, credit credit sale to Mohan rupees 5,000 is wrongly posted to Sohan's account. So here amount the amount is correct, the side is correct, but the account is wrong. So the correction will transfer the amount from Sohan's account to Mohan's account. Principle 4 we have, if posting is made to the correct account but with wrong amount. So we'll assume that the posting was made on the correct side. So the correct amount would be rupees 10,000. The recorded amount is rupees 1,000. So here the account is correct but the amount is wrong. So the correction will adjust the difference amount. Fifth principle we have, if posting is made to the wrong account on the wrong side, then we have to assume that the amount is correct. First of suppose cash received from Ram rupees 2,000, it has been posted as debit to Sham. So here the account is wrong, the side is wrong, but the amount is correct. So rectification will correct both the account as well as side. Next we have, if posting is made to the wrong account with wrong amount. For example, sales of rupees 5,000 to Mohan posted to Sohan for rupees 500. So here the account is wrong, here the amount is wrong, but the side is assumed correct. So the correction will adjust the account as well as the amount. Next, let's see the principle 7. We have, if posting is made to the correct account but on the wrong side. So we'll assume that the amount is correct. For example, cash received from Mohan rupees 5,000, but Mohan's account is credited. It is credited instead of debited. So here the account is correct, the amount is correct, but side is wrong. So the rectification will reverse the side. Next we have, errors in posting of individual transactions in subsidiary books affect only individual accounts and not the control accounts. So this means that if a sales entry is wrongly posted, if sales entry is wrongly posted to customer's account, then the sales account it remains correct, only the customer account needs correction. Now what is the importance of these principles? So these principles basically it guide the accountants, it helps to identify the nature of error It helps to determine the correct rectification entry. It helps to avoid confusion while correcting mistakes. So without these principles, the rectification could become extremely complicated. In a real business, errors usually occur frequently because it involves large number of transactions, multiple books, many ledger accounts. So therefore, the accountants must know how the errors have occurred, how they affect the trial balance, and how to rectify them properly. So rectification ensures that the financial statements, it shows the correct financial position of the business. Let's solve this question. Show the effect through journal entries. Credit sales to Mohan rupees 10,000 were posted to his account as rupees 12,000. So this is basically an error of commission. Why? Because the entry is recorded but with the wrong amount. So the wrong effect has been Mohan account debit rupees 12,000. Sales we have recorded correctly rupees 12,000. Not correctly, but this also we have recorded with the wrong amount. So the correct entry should have been Mohan account debit rupees 10,000 to sales rupees 10,000. Now basically Mohan account is debited excess with rupees 2,000 and sales account is credited excess by rupees 2,000. So we must reduce 2,000. We have to reduce both of them by 2,000. So the rectification entry would be sales account debit 2,000 to Mohan 2,000. Next we have cash paid to Neha rupees 2,000 was not posted to her account. So this is an error of omission. Omission, or this is partial omission. Because the posting to Neha's account was completely missed. Now the wrong effect would be, since entry has been recorded only in cash book, so Neha, Neha, we know no entry has been made. Only cash book has been. Effect of cash book has been. A cash book shows payment. Correct entry should have been Neha account debit rupees 2,000 to cash rupees 2,000. So payment to Neha means Neha's account should have been debited. Now since Neha's account was not posted, with simply record this Neha account debit rupees 2,000 to suspense account rupees 2,000. So suspense account is used because the other side was already recorded earlier. Next we have sales return from Megha rupees 1,600 were posted to her account as rupees 1,000. So this is basically an error of commission because correct account is used but wrong amount is posted. So wrong effect. Sales return entry posted as sales return account debit rupees 1,600 to Megha rupees 1,000. So Megha's account was credited by 600 rupees less. So correct entry should have been sales return account debit 1,600 to Megha 1,600. So rectification would be suspense account debit 600 to Megha account 600. Next we have depreciation written off on furniture rupees 1,500 was not posted to depreciation account. So this is basically an error of omission because posting to depreciation account was not done. So the wrong effect is entry recorded furniture account credited. Furniture account we have credited by rupees 1,500, but depreciation account it was not debited. So correct entry should have been depreciation debit 1,500 to furniture debit credit 1,500. So depreciation is account is short debited by 1500. So the rectification would be depreciation account debit 1500 to suspense account 1500. Now let's see the next question. Rectify the following errors. So credit purchases from Raghu of 20,000 were not recorded. So this is complete omission. So we'll record it. So the entry which should have been passed will pass it. Purchases account debit to Raghu account 20,000. Next we have it was recorded as 10,000. So there is short recording. So we'll purchase is short of 10,000. So we'll debit purchase by 10,000 and credit Raghu by 10,000. Next we have purchases from credit Raghu. It was recorded as 25,000. So there is excess of 5,000 has been recorded. So purchase there is excess debit of 5,000. So we'll credit purchases and Raghu's account will will debit to remove the excess credit. They were not posted to his account. So there is partial omission. It was not posted to his account. So the entry should have been purchases account debit to Raghu's account 20,000. But this portion has not been posted. So we'll debit suspense account to Raghu's account. Next, it was posted to his account as 2000. So their short posting is there. So suspense account debit to Raghu's account. Short posting of Raghu's account. Then we have it was posted to Raghav's account. So wrong account has been used. So Raghav's account will debit and to Raghu's account. This should have been the correct entry. This is the wrong entry. So to remove the excess credit, we'll debit Raghav's account. Next we have posted to the debit of Raghu's account. So instead of crediting, we debited. So there's an excess to 20,000 should have been credited and 20,000 we have debited. So to remove the debit effect, we have to credit that 20,000. So basically 20 plus 20 40,000 credit would be there. So suspense account debit to Raghu's account 40,000. It was recorded through the sales book. Recorded through sales book we have in this sales book means we must have credited sales. So to remove the excess credit, we'll debit sales by 20,000. We'll pass this purchase account debit because this has not been used. And to Raghu's account, 40,000 will be there. Okay. Next, we have rectify the following errors. Cash sales 16,000 were not posted to sales account. Okay. So cash sales entry should have been cash account debit to sales, but it was not posted. This portion was not posted. So suspense account debit to sales 16,000. Second, we have it was posted as 6,000 in sales account. So here short posting has been done. So we'll add it by 10,000. Suspense account debit to sales 10,000. It was posted to commission account. So instead of sales, we posted it to commission account. So in commission account, there's excess credit. To remove this excess credit, we'll debit commission account and sales account. They should have been the actual entry. So we'll credit sales account by 16,000. Next, we have depreciation written off as the machinery rupees 2,000. It was not posted at all. So the depreciation account should have been debited by 2,000 and machinery since depreciation is there, the asset value of machinery would reduce. So machine account debit credit 2,000. So it was not posted at all, then we'll just post this entry. Okay, it was not posted to machinery account, so this portion was missing. So suspense account debit to the actual entry which should have been passed. It was not posted to the depreciation account. So this portion is missing. This portion we have done. So we'll debit the depreciation account to suspense account. Next we have the trial balance of Anurag did not agree. It showed an excess credit of rupees 10,000. So Anurag put the difference to suspense account. He located the following errors. So first of all, we have sales return book was overcast by 1000. So to rectify this, we'll pass the entry suspense account debit to sales return. Next we have purchases book was undercast by 600. So purchases, it has usually has the debit balance. So it was undercast by 600. So we'll pass purchases account debit 600 to suspense account. Next we have in the sales book, total of page number 4 was carried forward to page number 5 as 1000 instead of 1200. So basically 200 has been undercast, and the total of page number 8 was carried forward to page number 9 as 5600 instead of 5000. So 600 overcast. So basically 400 has been overcast here. So we'll debit sales account by 400 and to suspense account 400. So here basically overcasting has been done of 400. Next we have goods returned to Ram 1000 were recorded through sales book. So sales we have basically credited. So there's an excess credit in sales. So we'll debit it. And to return outwards, there should have been the actual entry. So we'll credit this. Next we have credit purchases from Messrs. MN Company 8000 were recorded through the sales book. It was recorded. It actually purchase should have been happened. Purchases to MN Company. It was recorded through the sales book. That means we have shown it as sales MN Company. So this should have been the correct entry. So this will basically be debited. This is a wrong entry. So this will debit it. And this should have been the correct entry. This we have wrong done this. We have wrongly debited it. So we'll credit this. So for MN Company, the correct would be MN Company 8000, and for removing this excess debit, we'll once again add this. So 16,000 credit. So MN Company 16,000 credit, purchase debit, sales debit. Next we have credit purchases from SN Company rupees 5,000 were recorded through the sales book. So credit we have purchased. So actual entry should have been purchases account debit 5,000 to SN Company. But we have recorded through sales book. That means we have shown it as sales. Debit to sales 5,000. This is the wrong entry. This is correct entry. This should have been done. So we'll, for rectification, this should have been the correct entry. So purchase account debit. Sales, this is wrong. So to remove the excess credit of sales, we'll debit it. Sales account debit. And this SN Company, it should have been credited. Correct entry should have been credited with 5,000. And we also have a excess debit in SN Company. So we'll credit this amount also to remove the excess debit. So 5,000 plus 5,000, 10,000 to SN Company 10,000. Here 5,000 and here 5,000. Here we have. Next, salary paid rupees 2,000 was debited to employees personal account. So salary account should have been debited. Employees personal account was wrongly debited. So to remove the wrong debit, we'll credit employees personal account. So suspense account, whatever suspense account have been passed, we'll post it here. This is our final balance. Next we have trial balance of Rahul did not agree. Rahul put the difference to suspense account. Subsequently located the following errors. Okay, first of all, the wages paid for installation of machinery 600 was posted to wages account. So wages paid for installation of machinery, first of all, it should have been capitalized. So we entry should have been machinery account debit to cash. but instead we showed it as wages account debit to cash. So this should have been the correct entry. So we'll debit this. Here excess debit and wages account is there. So we'll credit this. Second, we have repairs to machinery 400 debited to machinery account. Similarly, like this account, repairs paid to machinery was debited to machinery account. So it was not to be debited to machinery account. So there's a wrong debit in machinery account. So we'll credit it, and repairs account should have been debited. So we'll debit this. This is the correct, and this is the rectification of the wrong entry. Then we have repairs paid for the overhauling of second-hand machinery purchase of rupees 1000 was debited to repairs account. So there's a wrong debit in repairs account, so it will be credited, and machinery account should have been debited. It means it has to be capitalized. Own business material rupees 8000 and wages 2000 were used for construction of building. No adjustment was made in this book. So basically this entry has been omitted. So we'll uh, pass the entry building account debit to purchases to wages. Total of sales return book to 3000 was not posted to ledger. So we'll post it. Furniture purchase for rupees 5000 was posted to purchase account for rupees 500. Okay. So furniture, it should have been 5000. So purchase, we have excess debit. So we'll remove this, and difference in suspense account will pass. Then we have old machinery sold to Kareem at its book value of 2000 was recorded through the sales book. So machine was sold. We have shown it as sales. So basically there's an excess. There's an Kareem we have debited to sales. Correct entry. So the sales will be debited, and to machinery we'll credit this. Next we have total of sales return book rupees 3000 was not posted to the ledger. So we'll record this because it has not been posted. Now let's solve this, test your understanding. Take the correct answer. Agreement of trial balance is affected by, the answer is by one-sided errors only. Okay, so trial balance basically does not agree when there are one-sided errors, because the debit and credit, it does not become equal. So two-sided errors, it affects both the sides equally. So basically the trial balance agrees. Now, which of the principle is not an error of principle? So let's see. First of all, error of principle occurs when the capital expenditure is treated as revenue expenditure, vice versa, like that only. So here, first of all, we have purchase of furniture debited to purchases account. So yes, this is an error of principle, because the purchase of furniture, we know furniture is an asset, but it has been recorded as purchase expense. Then we have repairs on the overhauling of second-hand machinery, purchase debited to repairs account. This is the repairs on overhauling second-hand machinery debited to repairs account. Basically, overhauling, it increases the value of assets. So yes, it should have been capitalized and not repairs. Cash received from Manoj posted to Saroj. So this is basically an error of commission, because correct type of account is there, but the wrong person has been used. Sale of old car credited to sales account. Here the sale of asset recorded as revenue. This is error of principle. So in this, which one is not an error of principle? Answer is option C. Which of the following is not an error of commission? Okay, so error of commission means there has been wrong posting, there's been wrong calculation, as well as wrong account. So overcasting of sales book, this is error of commission. Credit sales to Ramesh 5000 credited to his account. Correct entry. This is not error. Wrong balancing of machine account. This is error of commission. Cash sales not recorded in the cash book. This is error of omission. So the correct answer is D. Cash sales not recorded in the cash book. Fourth, we have which of the following error will be rectified through suspense account. Okay. First of all, we have sales return book undercast by rupees 1,000. So here only the sales return account is affected. So trial balance would be affected. Second, we have sales return not recorded. So here basically both the sides are missing. So the trial balance would not be affected. Then we have sales return by Madhu rupees 1,000. It is recorded as 100. So here sales return of 1,000 recorded as 100. Both the sides wrong equally. Then sales return recorded through purchase return book. This is a two-sided error. Fifth question we have, if the trial balance agrees, it implies that trial balance. Okay, so basically trial balance agreeing does not guarantee to no errors, because two-sided errors can still exist. We know example are error of principal, compensating error, wrong account. So the correct answer is B. There may be two-sided errors in book. So if suspense account does not balance even after rectification, that it means that that some errors are still not found. These may include both one-sided error, two-sided errors. So the correct answer is D. There may be both one-sided errors and two-sided errors yet to be located. If wages paid for installation of new machinery is debited to wages account, then installation cost of machinery is basically capital expenditure. It should be added to machinery. So recording it as wage expense, it is wrong accounting treatment. So the correct account would be error of principal. Next we have trial balance. So trial balance, we know it is a statement. It's a statement showing debit and credit balances of the ledger accounts. Then we have trial balances prepared after all the ledger postings are completed and accounts are balanced. So students, let us briefly summarize what we have learned in this chapter. So in this chapter we first understood the meaning meaning of trial balance, purpose of trial balance. So we understood trial balance is a statement prepared from the balances of all the ledger accounts to check the arithmetical accuracy of the books of accounts. We also learned that the trial balance, it helps in detecting certain errors as well as, but it cannot detect all the errors. So even if the trial balance agrees, some mistakes may still exist in the books. Then we studied the different types of errors. We studied error of omission, error of commission, error of principal, as well as compensating error. So we also learned which errors affect the trial balance and which do not affect. So after that we discussed the process of rectification of errors, which means correcting mistakes in accounting records. We saw how rectification entries are passed depending on the nature of the error. We also discussed the concept of suspense account, which is opened temporarily when the trial balance does not agree. So this account helps us to locate and correct one-sided error. Finally, we learned the guiding principle of rectification of errors, which help accountants to identify the correct method of correction. So understanding these concepts is very important because accurate accounting records are necessary for preparing the correct financial statements. So students, this was the complete explanation of this chapter, trial balance and rectification of errors. I hope this lecture helped you understand the concepts clearly and made this topic easier for you. If you found this video helpful, please like this video, share it with your friends, and subscribe to Ria's classes for more detailed accounting lectures. Thank you for watching, and I'll see you in the next class. Bye bye.